Welcome back to our next research and insights video about Bitcoin market analysis. Today's analysis focuses on one of the most important questions currently facing Bitcoin investors. Is Bitcoin finally transitioning out of a liquidity stress environment and entering a new institutional recovery regime or not? Many market participants focus on the price, but institutional investors look much deeper. They study market regimes because financial markets rarely behave the same way over time. Periods of calm are replaced by stress. Stress eventually evolves into recovery, and those transitions often determine where the largest investment opportunities and the largest risks exist. The challenge is that regime transitions are never obvious while they are happening. Markets usually provide mixed signals before a new regime becomes fully established. That is exactly where Bitcoin appears to be today. Instead of asking whether Bitcoin will simply rise or fall tomorrow, we should ask a more important question. And this question is that, has the underlying market environment itself begun to change or not? As we know, markets don't remain in one condition forever. Instead, they continuously transition between different market regimes. During liquidity stress, uncertainty dominates, volatility increases, institutional capital becomes defensive, and risk appetite declines. As conditions gradually improved, markets often enter a transition phase. This phase is characterized by improving liquidity, declining volatility, a stronger structural support, and increasing institutional participation. However, recovery rarely occurs overnight. Instead, probability gradually shifts from one regime toward another. This means markets often spend weeks or even months moving between states before confirmation becomes clear. And this transition period is where regime analysis becomes especially valuable. Rather than reacting emotionally to every daily price movements, investors evaluate how likely the market is to remain in its current regime or transitions into a different one. Understanding this probability helps improve both investment decisions and risk management for our decision making in Bitcoin market. The current market Bitcoin displays several encouraging characteristics. Liquidity conditions have improved compared with previous stress periods. Institutional participation continues expanding through ETFs and broader market involvements. And volatility has become more controlled than during the previous panic phases. At the same time, macroeconomic uncertainty has gradually moderated. These developments are consistent with what we would normally expect during the early stage of regime transitions. However, one important point remains, and this point is that confirmation has not yet been fully achieved. Institutional recovery requires persistence, and one positive week or even one positive month is usually insufficient for this purpose. Instead, we need evidence that the probability of remaining in the recovery regime continues increasing over time. Until then, investors should avoid assuming that the transition has already been completed. Instead, they should monitor whether current improvements continue strengthening or become reversing. One of the most important concepts in modern financial research is regime persistence. Markets don't simply enter a new regime because prices increase for several days. A true regime shifts occur when the probability of remaining in the new environment becomes consistently high. For example, If markets enter a recovery regime today but quickly return to stress next week, then no genuine transition has occurred. Instead, the market simply experiences temporary optimism. Institutional investors therefore evaluate not only transition probability but persistence probabilities. And persistent measures how likely the market is to remain in its current states rather than immediately reverting back. Higher persistence implies greater confidence, and lower persistence implies the uncertainty remains elevated. This probabilistic framework provides a much more robust approach than relying solely on traditional technical indicator or short-term price movements. So, going forward together, investors should monitor several critical indicators according to the regime change in the Bitcoin markets. First, does liquidity continue improving? Second, does volatility remain relatively stable instead of returning to crisis levels? Third, are institutional investors continuing to increase participation? And finally, and perhaps most importantly, does the probability of remaining in the recovery regime continue increasing or not? If this condition persists, Bitcoin's transition toward an institutional recovery regime becomes significantly more credible. If not, the market may still be trapped inside a prolonged transition period. For now, the evidence appears increasingly constructive, but confirmation remains incomplete. That means disciplined monitoring remains more valuable than overconfidence. Thank you so much for watching this edition of BetaG Dynamics Research and Insights. As we know, understanding Bitcoin requires more than following price charts. It requires understanding how market regime evolve, how transition probability change over time, and how persistence determines whether a new market environment is true emerging. The framework presented in this video emphasizes probability-based market assessment rather than simple directional forecasting. As new market data become available, the evidence supporting or rejecting the current transition hypothesis will continue to evolve. If you enjoy research-driven Bitcoin analysis grounded in quantitative finance rather than speculations, subscribe to these channels and follow BetaG Dynamics for future market intelligence updates. As you know, this video is based on the methodology developed in our attached research article, as you can see with the titles of Regime Switching in Bitcoin Volatility under Global Uncertainty, Markov Switching Arch, and Hidden Markov Couple Approaches. These concepts of regime transitions, persistence, and probability-based states identification presented here are adopted from that research framework and applied to the current Bitcoin markets. Thank you so much for watching this video.